last few years, I've been fortunate enough to build up a double-digit property portfolio. During this period, I've had to develop my own knowledge and navigate through a whole host of challenges and mistakes. But the reality is, if I can do it, then so can you. This Property Market Investor Expert Series has been created so that you can learn from the mistakes which might otherwise be made along your journey, and open up your knowledge to identify investing opportunities which you may have otherwise not even been aware of. Today I'll be meeting with Garry O'Mara, who's been investing and buying property for over 27 years. Garry was originally involved in the property education space before moving into completing his own projects. His first of which was a 43-lot subdivision on the north side of Brisbane. Garry has been involved directly and indirectly in upwards of 1,000 property investments over the last 27 years, as well as $30 million worth of his own private developments. So what's Garry's strategy? Garry's strategy, an area of expertise, is splitter blocks within high capital growth suburbs of southeast Queensland. So let's find out from Garry more about his successful strategy. Hey Garry, how's it going?
Yeah, well, I'm good, mate, very good.
How did you get started in property?
Oh, I mean, I probably stumbled in it to start with.
Yeah.
I didn't really understand the marketplace and those sorts of things. Spent many years in that market and understanding and working with different clients, and then started to get an understanding of how I could do things for myself.
Yeah.
And then 2000, I thought I bought my first first property, I suppose.
Ah, yeah. Why was it a principal place of residence?
Yeah, well, I was probably a late starter.
Yeah. How old were you at that point?
Oh God, I would have been mid-30s.
Ah, yeah.
Okay.
I'd say that's probably average. Right?
Oh well, yeah. So
you're an average starter.
Yeah. So and yeah, I bought a little house in Brisbane.
Yeah.
And in a suburb called Hawthorn.
Ah, yeah, that's a great location, right?
Yeah, well, I bought it more the fact I was going to live there. And the girl at the time I was pretty keen on, she liked that area, so we decided to buy a house there, and away we went, sort of thing. So on a personal basis, that one property sort of, as years went by and the equity grew in it helped me got in my first development.
Okay. So
we developed 43 house and land package or subdivision on the north side of Brisbane in the mid 2000s, and
sorry, that's 5 years after the initial purchase.
Yeah. Well, I bought the property and I'm a great believer in interest-only loans.
Yeah.
Okay. At the end of the day, at my age, you can have all this debt, and I won't live long enough to pay it off. So unless you buy something that's going to have a capital gain in it or capital growth, for me, there's no real point, you know what I mean? And then ultimately, I suppose it's just my personal point of view, paying things off, especially in the property marketplace, especially the things where it's got a capital gain in it, is it's only helping the bank.
Yeah.
In that regard. I mean, you pay your own home off for sure, but everything else. But the point I'm trying to make is that property on its own, I needed $150,000 to get into this particular property development I wanted to do, and I would have never have saved that.
Of course. So what was the purchase price of the Hawthorn one, and what were you able to refinance?
Oh, well, I bought the property in Hawthorn for $320,000. I mean, it was only a little timber house, little old workers' cottage on 600 square metres of land.
Yeah.
Okay, and I used the equity out of that to put down as a deposit, or not put it as a deposit, I used that as part deposit, but then to put in my fair share, okay, for the development costs of our land subdivision.
I see. Was this in a partnership?
Yes, I got a business partner, a lawyer business partner of mine. We're still in partnerships today.
Okay. Yeah.
So we were probably young and very inexperienced, but ultimately my background in the investment industry, I knew that if we put a good property together, we'd have clients who want to buy it.
Yeah, indeed.
So, we had court cases and all sorts of things with councils and
that in this first development.
So it was very. I mean, you look from afar, you think, oh, these guys are big property developers and it's easy and they make money and it's just falling over themselves and all that sort of stuff, and then you get into the situation where you're paying, for town planners and designers and engineers, and if you don't know the things, the reality is you don't know the things you don't know.
Yeah.
So you get into the stages where engineers, they do silly things like we had some of our blocks cut the wrong way, as in we did landscaping and those sorts of things, and it just made a massive difference to the end product.
Yeah.
And knowing what I know now, you don't fall into those traps sort of thing. So,
Indeed.
but getting back to that little house, you know, we did the development. I put the money back. The money I drew out of that property, I put it back in, and it helped me get into the next one. So I used that equity out of that. I did it again.
So your first development project was pretty large.
Yeah, I suppose at that stage, because of my background in the property investment industry,
you were comfortable.
I had. If I produced a product, I knew what the product we needed to produce.
Yeah.
Okay, it was in the lower end of the marketplace, but we had to be, you know, close to trains, close to, you know, the infrastructure and all those sorts of things. So I knew that if I did that, you know, we had any manner of companies that would come on. To help me get across the line, we had probably 3 different builders to come in, and they bought probably half the development off the plan. Okay, so when
builders would. Okay,
yes, because they wanted, you know, in their eyes, they wanted the stock.
Yeah.
Okay, good quality land in a good area. You know, it tends to go fairly quickly.
Yeah.
So to underwrite the structure of it all, so that, you know, I'm fairly conservative by nature, so I didn't need to be, you know, I'd rather be $400,000 in debt than $4 million in debt and try to carry those. So I wanted to have a bit of background, backup, so that I wasn't just hoping and praying on the general market to sell everything.
So to put that in context, what was the total land size of the original purchase?
Oh, I think it was about 40,000 square metres.
40,000. And you diversified the risk by on-selling significant portions to builders?
About half of the development I wanted pre-sales before I started developing the whole thing.
Yeah, I see. Okay.
So I had 3 or 4 different builders I knew, and you know, they only took, I think we were 3 builders and they took about 20 blocks between them.
Yeah.
Okay, which basically was half the development, which in that stage was, you know, it was nearly dollar for dollar coverage by the time we developed it and did everything like that.
Yeah.
And when I went to the bank said, fine, you know, you've got most of your costs covered.
Was that an actual requirement to gain finance for construction?
Yeah, I went for me, I went to the bank and I wanted to go from a strong position.
Yeah.
I didn't want to go there and hope and pray and whatever. And I said, look, and I sort of, you know, I spent enough time with them to understand what they wanted.
Yeah.
So that I went there and I got a good facility, and I got a. The hardest thing in any banking thing is trying to find someone internally inside the major banks now who actually knows what they're talking about.
How do you influence?
Well, I don't know whether that. I was lucky, I suppose. We got the guy I dealt with Craig in the bank, which he's since moved on.
Yeah.
But he was. I sat down with him, and I'm pretty blunt. I said, mate, have you done development stuff before? Yeah. I asked him some serious questions.
Yeah.
And I said, mate, I don't need some idiot here trying to tell me what and I don't need someone overcomplicating it.
Yeah.
You tell me what you need, and I'll see if I can put that together. And if we can meet in the middle, well, then we got a deal.
So did you knew at this stage that you were always going to go direct to the bank? Was there ever the thought process of using a broker?
As the years ago, I mean, you got to understand, this is thick end of 15 years ago.
Yeah.
Okay, so at that stage, you could still find competent people inside the banks.
Yeah.
Okay, and I don't mean to put banks down, but the biggest problem in there is now is you get someone, you go to the bank and you want to talk to them about, classic, where I live in Brisbane, the average house price in that local area is probably over $1 million.
Yeah.
Right? And if you go down to the local bank, I mean, I bank with Commonwealth, so you go down to the local Commonwealth branch there, they don't even have tellers anymore, right? So it's all electronic, there's people there, and you open the door and you say, if you want to say, look, someone, you know, I want to buy the average house here, so you're looking at a loan of $1 or $1.2, $1.3 million loan, and you walk into that bank and you sit there and talk to someone, you've got someone who's 25 years old, right? And all due respects, they don't understand your situation, right? They've got all they've got is a computer screen, and they fill in the blanks, and if you fit that, you got something, right?
Yeah.
If you don't, God forbid you're self-employed, and they've got to look through tax returns and things like that. They just look. I mean, the poor buggers haven't got the training either. You know, I'm not bagging the particular people.
Yeah.
But from my experience in the banking industry, that the people who've got 20 and 30 year experience that you want to go and talk to someone about their property development on that sort of scale. I mean, it's not like it's a massive property development in the grand scheme of things.
Yeah.
But you need to have someone on the other side that goes, you need to restructure this, you need to put it this way, you need to do that so it fits into their
So
model.
they've done it before. It's kind of like finding a competent finance broker. You need someone who's built out a portfolio, who's been there. You're not kind of creating the process with them.
You know, when you sit there and say to them, look, what do I do this, and they just got a blank look on their face, it's like, well, you know.
It's the wrong person.
I mean, I'm not the smartest guy getting around, and when I do business with people, which doing business with banking, they're a major part of the process. I want them to be smarter than me.
Of course.
You know what I mean? So they say to me, look,
everybody else.
Exactly. So you say, look, you know, Gary, do this way, do that, do that. It'll save you money. I can get you a better facility.
Yeah.
I go, great. You know, as opposed to them saying, you don't fit my criteria, right?
Yeah.
So, well, today my situation is dramatically different. I mean, I started my own finance brokerage with a business partner.
Yeah.
Simply because my private clients now, sending off to the bank or off to a broker or whatever, you know, your bigger franchise of brokerages, again, you'll probably run into that same sort of scenario. You got someone who has limited experience, who's done their courses or done their training, right? They don't, again, know how to put this sort of deal together, right? So we, instead of sending clients off to the bank or after that, we sit down with them, okay, understand their processes, what they're looking to achieve, and then we just roll it out. Then we say, right, well, this is different banks. And then that's what any brokerage would do that. But that's the sort of thing we wanted to do. And now, me personally, I just go to Dan and say, look, mate, this is what I want to do.
Yeah.
I don't know how we're going to do about it. What can we do?
Heads up the brokerage side of things.
Yeah, he's my business. He's got all the licenses and all that.
Yeah.
You know, and ultimately, you know, we've only got a small brokerage, but we look after our clients, and we want them to be able to come back to us. And they ask you the silly questions and all that sort of thing, because the banking industry, it's really complex this day and age. You know, I mean, it's not. When I was a kid, when I grew up in the bush, and my old man, we had farms. He'd go and see the bank manager once a year and basically get an idea of what money they'd need, you know, for the year, and say, yeah, we'll look after you. We can do that and this and that and whatever. And they go off and, you know, buy cattle or feed and whatever. Whereas today, it's, you know, it's very automated. You don't have there's no real personal experience. They don't get to know you. They don't get a chance to
Do you think
build.
then that's the difference between a really good mortgage broker and one that's not so good? It's the person that has the contacts with those appropriate people.
It's like across all industries, mate.
Yeah.
Okay. It's that some people are talented.
Yeah.
And some people care.
Yep.
And some people are trying hard and don't really care that much. Do you know what I mean?
Yeah.
So I got a good mate of mine who's in the health industry.
Yeah.
And you know, and he said to me, and his company supplies knees, you know, and elbows and shoulders and all that sort of thing. And I happened to hurt my foot.
Yeah.
And I said to him, mate, you know, do you know a good surgeon? Thinking that, you know, if they're a surgeon, they're all good. And he said, oh, mate, you got, you know, like this guy here, this guy here, this guy here, but don't go seeing those guys over there. I said, what do you mean? He said, mate, some of them were hopeless. You know, and for me, I'm not casting aspersion on those people, but it's across all industries.
Yeah, fair enough.
You know, you get to the stage where you go, it's like a mechanic for your car. You know, I mean, we've all got thousands of stories about all the bad mechanics we've ever had. Then you go, mate, I've got this good guy down the road, you've got to go see him, he'll look after you, knows his stuff, and you stick with him.
So do you think then to find that good quality finance broker, you need a referral?
It's, well, from my experience in business, the best business you'll do is when someone, you know, is a word of mouth.
Yeah.
You know what I mean? The company, our company, Australian Terra Firma, we would probably do 30-40% of our business on referrals.
Yeah.
Because every time I sit down with a client and someone who comes on board, any number of times they'll say, look, I've got a couple of mates of mine, they'll be thinking about doing something. But the hardest thing about buying investment property and doing those things is there's any number of companies out there want to sell you something.
Yeah.
Okay? But there's not a lot of companies that can sit down and pull your situation apart and say, here, you know, what do you really want to achieve? You know what I mean? And then say, look, we can do this, and give them the options. One of the reasons, you know, I worked in some of the biggest marketing companies in Australia.
Yeah.
And because they're so big, they haven't got the time or the expertise to be able to sit down and delve into what you really want to do.
Yeah.
Okay? So they're going to sell you something that's off the counter, off the
Not
shelf.
necessarily correct for your circumstances.
Exactly, or it is, if there are the really big companies, they got a situation where they've only got the cookie cutter stuff to sell you. You know what I mean? Which is what everyone else buys, and buy a townhouse here and you might be one of 150, or buy a high rise, or do whatever, or you get into a large scale housing development where, you know, out of 100 houses, you might be 50 of the rental properties. Yeah. Okay?
So this first development that you did, this was it sounds as though it was a significant learning curve for yourself.
Oh, court cases and councils and town, I mean, you know, I mean, we made probably a third of the money we were thinking we were going to make, because it just took so much longer. But I mean, as much as anything, we had a good time doing it, and you know, and you learn all these things and all those sorts of things. So we grew to the fact that you know and understand how those sorts of things
work. You were
work.
way better positioned as a result after you came to the end of it.
Well,
what was the total time frame from
start to finish? About 3 years, I suppose.
3 years, okay.
Because we had to amalgamate four sites. We had 4 different owners. Okay, and there'd be any number of people who've tried to put them all together to start with. Most of the companies who went and talked to the 4 owners, and you got to understand, these people own, you know, they're 10,000 square metres, they're little acreage blocks, the zoning could change and they could be amalgamated. But anyone with real money went to them and just and really, you know, lowballed them. Okay, so I'll give you a cash contract for about 2/3 of what they wanted. When I sat down with the different owners, and they were, you know, one was a solicitor, okay, and a couple of retirees, and they were people. This is a retirement fund. You know what I mean? That was the only real equity they had. And I said to them, I said, look, I'll pay you what you want as long as it's financially viable, right? And the trade-off was for that, though. I said to them, but we'll do a call option with you, okay? But I won't be able to do anything until I get a DA, okay? So. At the end of the day, we didn't have any money.
Was there an option fee payable to them at the start?
We paid them small deposits. But the trade-off was, you know, we were going to pay them $50,000, $60,000 more per site.
I see.
And put their,
is that upon the realisation? So when you've sold all the properties?
So no. At the end of the day, we said we can get a DA because we had to do a material change of use. Okay, so we amalgamated. There were 4 sites. Okay, and we had to do a material change of use on all of them, so they went from rural residential into Res B. Okay, which was a bit of a punt. Okay, but on a town planning process, it was good town planning. Right? And in the end of the day, we got our DA and we beat the council and we got what we wanted because we ended up at the Environment Planning Court, the EPA court, right? And we won on good town planning principles. Okay, so at the end of the day, we won because what we were doing, you know, 150 metres from a train station, we want to build some houses. You know, at the end of the day, you know, having it as whatever they thought they were going to do with it, whatever was. And many, many years later, it was fairly ironic that the zoning changed to a much higher density than what we were looking for to do to start with. So.
Well, you set the precedent, right? You provided the platform for everyone to go.
I mean, but we had all sorts of trouble. Like they wanted to. This is how we had to be in the court. They wanted to charge us $300,000 to upgrade the whole sewer system, or they wanted us to put a pumping station in. Right, and it was just
changing the face of the suburb.
So to digress, but it did. They didn't need it. They were just trying us on.
Of course, they're seeing what they can get away with. I suppose that's part of the learning curve, right? You know, if maybe you're not so experienced and you have the cash, maybe some developers would say, "Okay, I need to give in."
Well, this will make you laugh. We offered them $100,000 and say because they said they wanted $300,000 a pumping station. We priced it. We could build it for $100,000. Right. We'll say no. Look, we'll build it. We'll supply the pumping station. And they went no. Then you knew they really didn't want it.
That's it.
They were just trying us on.
Jesus.
Okay, so it was just anyway. You know, I mean, I love property. Okay, and not that. You know, the crap idea is that the reason we do what we do now with the infill stuff and all that is that we get to show people we've made some people some money. You know what I mean? And that's the exciting thing for me when what we do is I love making a sale and I make money from doing it. You know, no worry about that. But when you can go to a client 12 months, 18 months down the track and say, look, mate, they're selling the house down the road for, 100 grand, 120 grand more than what you paid for yours. Similar house, similar size block of dirt, all that. I get it's fun. I've got 4 or 5 good mates of mine.
Yeah.
That I've made them 120 grand, 150 grand. There's not many people can say that, I got them into this and they made some really good money out of it.
No, you're getting showered a beer every week, right?
Oh, well, I wouldn't say that, but yeah.
So would it be true to say that you learned the process yourself through doing your own projects, and they sound like pretty large projects, and as a result of that, you've carved a bit of a niche in the Brisbane market because you've taken some of the principles and the application of small developments. Almost.
I wanted to. When we got out and did our own thing, we got basically Dan, my business partner, in that first other thing. I was involved with companies who were selling that cookie cutter stuff to every man and his dog and all that sort of thing. We wanted to stay in the property game, but we wanted to do, the next generation or the smarter people, especially where I was living. You could, 10 or 15 years ago in the Balmoral, Hawthorn part of Brisbane, the local sport was buying a splitter block and building a big house on it and selling it off and doing all those sorts of things. So I wanted to offer it on a cheaper scale, but to our clients. You know what I mean? And show them that with a little bit of work, you know what I mean, and you don't have to be, we hold everyone's hand, we get them through it, but ultimately we can show them that this is achievable for them, not just, the people with big pockets and they've got lots of money, or you're a builder or you're a so-so developer and all those sorts of things, because not everyone can do a splitter block, but, I can say to them, look, we've got one here, you can buy one half. Yeah. You know what I mean? And those sorts of things, and get them in. Because I call it wholesaling, okay? Whereas instead of, if you go and buy a finished house on a nice splitter block, you're going to pay full retail for it. Yeah. Right? Whereas even if we just buy one half off a client, one of our clients is doing a splitter block, but they can't afford to do both, but they can develop the land, build a house on one. We'll buy one block of land here off them. We'll still get that at a discount rate. Yeah, indeed. And by the time you put that together and it's a margin in the land, and if the thing I'm trying to get across to people, they say, well, why wouldn't I buy a finished product? Well, if you buy a finished product, you're going to pay full retail for it, right? So whatever margin, and let's face it, no one goes into buying a block of land to an on sale and do a quick sale unless there's a good margin in it. So I wanted my clients to be able to keep that margin. So that's, and that's the fun bit, you know what I mean?
In layman's terms, for somebody who might not be too familiar with this side of investing, what is a splitter block?
Well, in parts of Brisbane now, you've got older suburbs, within that, that 10 to 20 k's radius of Brisbane. Right, there are more established suburbs, okay? And you've got mum, dad, or grandma and granddad sitting in their little timber house or the little old, brick house sitting on 800 square metres of land or 900 square metres of land. Some of them actually on 2 titles already. Right, and you won't notice that until you look at, you go to the tiles office, you go to RP data or those sorts of things, and they'll show you if it's on. And that doesn't mean you can't split them, but what that means is the councils now want more and more people in a smaller area. Okay? So what happens now is that you can go there and say to grandma and granddad, they bought this house in 1975 and they paid $8,000 for it, right? You go and say, look, and it's probably worth, so it's now somewhere between $600,000, $700,000, $800,000. But if you split that up, put it on 2 titles, if it's not already on 2 titles, do the, and put whatever services on, that block of land's probably, it's going to be worth, say you sell it, you buy it raw with the house on it for 700. Those blocks of land are probably worth 400 to 450 as a separate block, as in the 4 metres as opposed to the 700. So, there's a real margin in that land. It's not on every block, but if you can buy them right, you get them set up. Okay, by the time you put a nice house on it, because you put a nice house on it, it's going to be worth a thick end of 8, 9, maybe even $1 million.
So when you say wholesale rate, that is somebody who's prepared to do the work, to identify the opportunity, put the services there, separate the blocks with council, then you've got the inherent value increase there.
Yeah.
Whereas if you buy in, say, off the plan, maybe, it packaged up.
What happens?
And you paid for the difference, and the developer's going to take that as their profit for doing the work.
Exactly. So, without doubt, and that's just business. That's the way it is. Having said that, in certain parts of Brizzy, there's still room for your client or my client. They still make money on that, right? So, depending on where they go.
Yeah.
So, it's the service that we provide is one, finding the block of land, and then we do all the due diligence. Okay, and you say, well, look, this is what it's going to cost. This is what it's going to. Because I say to real estate agents all the time. I say to them, what does the client want? What do they need to get out? What will buy it? And I don't argue with them. I just say, look, guys, unless there's some uplift in it for my client, they're not interested. Okay, so at the end of the day, we only look at we look at those particular properties, but at the end of the day, I'll look at probably 20 to start with. I'll probably cull that down to there'll probably be only 3 or 4 at the end of that.
What sort of suburbs in Brizzy have these opportunities? All
over Brisbane, mate. There's greater parts of Brisbane, right? And we don't limit ourselves to just eastern side or north side or south side of Brisbane. At the end of the day, it's more dictated to me what our client's price point is. If my client's only got $400,000 or $500,000 or $700,000 or whatever, that dictates to me to where we can go. Because there's certain parts of Brisbane that, you can go down towards the bay, and there's cheaper blocks of land. You can do things down there. But again, that goes back to what I was saying earlier. When we sit down with that client, not everyone's got the want to do that splitter block.
Do you need a risk profile that's suitable?
I suppose, but you get Mr. and Mrs. Jones sitting there and you talk to them, and you'll see straight away whether you usually sometimes, we'd love to do that, and the other half goes, I don't think so. So
whatever she says, that's...
Yes, exactly. But you try and find that happy medium. You know what I mean? So look, if I could get this for you, are you happy with that? And all that means to me is it gives me it gives me a profile of what sort of product I'm looking for. And I usually go and sit down with the client initially, and I give them I'll be there an hour. I give them a full overview of what we could do. Right? And I say to him, well, where do you want to fit in that process? Understanding we're very much independent. We don't own any of the land. We're not trying to push a particular development. The only thing I'm looking for is get the best possible return for my client.
Indeed, and you're kind of outlining what the projected return is through a feasibility. Is that the next?
At the end of the day, mate, we do. We don't work off, you can get reports from RP data and all this sort of things and what's happened, what hasn't happened in the last 25 years, whatever. At the end of the day, I'll look at what the local sales have been doing. Okay, so we've been selling houses around the corner for, there's a block of land here for $450 and it costs us $350 grand to put a house on it, right? It owes us, $800,000. If I can't show someone that's going to be, that there's been sales in that area for, somewhere between $850 and $920, I wouldn't show it to them.
Could one of the mistakes that some people are doing when they're doing their own research is that maybe they're looking on real estate or domain and they're looking at the comparable sales or the median price value within a suburb, but that doesn't reflect the change in dwelling size over time?
It's easy to... The biggest problem with those sorts of numbers, right, is that they're such a broad cross-section. Right, and then in the suburb, you can have a good part of a suburb and a not so good part of a suburb. You could have an average of a suburb which is great. Well, there's a classic example where I live, but there's certain parts of that there's a big gullies, and you've got houses that are cheaper. They're right down the middle of the gully. You know what I mean? So we take a more closer view at it, as in, this is our block of land. This is what we're going to put on it. We're going to build it, so we don't want to give ourselves a problem. But then sometimes there's tricky blocks with the right work done on it, can get a very good return. You know what I mean?
Because other people have taken it down because the slope.
Because it's just exactly right. So you can have situations where, and that's what, I use probably 3 different builders, because you got your smaller size house builder, your 2-story guy, and the guys that like to, who specialise on sloping blocks. Because in those infill sites, you might have something that's a bit harder to build on, right? But if we can get it right and we can do our number and we know what we're doing, then all of a sudden there could be a really good uplift in it for the client.
Indeed. So how important is that contact base for you, that network of builders and...
For me, it's the most important thing. Because you've got to be able to rely on those people when they say to you, I say to all my builders and everything is fixed price.
Yeah.
Okay, when you give me that price, that's it.
Yeah.
And I'll say to them, I said, mate, if you hit rock or whatever, I said, mate, don't come talking to us because we don't have any more money.
Yeah.
You know what I mean?
Which is what some clients need, right? If they're geared up to 80%, they've used everything.
Mate, I don't care whether you've got all the money on the planet, whatever, but again, we don't squeeze our builders into the ground either.
Yeah.
Okay, and that's one of the biggest things I find with people, right? They'll go there and they'll get the cheapest builder.
Yeah.
Right? And then you see the finished product and you just go, mate.
It's reflective.
And exactly, and they wonder why. And you get situations where you get a really nice street, okay, the house sold for this, then this one here that you think's very similar, sold for 50 or 60 grand cheaper. Then you may or may not get a chance to get inside it.
Yeah.
But you go and have a look and you go, oh, they put really shitty stuff in here, down there, and there's gaps here, and you can tell. Because most big builders buy everything for about the same price, right, as in their materials. The only thing that shrinks in the price is the labour content. So if you're doing that, it means you're not paying your subby. I mean, I was telling you this before, mate. I had clients of mine that I went and did a handover with my rental lady.
Yeah.
And the builder stood there and said, mate, that's it, we're never coming back here again. You know what I mean? And simply because they gave the owner who didn't go with one of my builders, right, the real cheap price, which was literally 25 or 30 grand cheaper.
Yeah.
But there was real things needed to be rectified on the property.
Yeah, okay.
And they just said, mate, that's it. You know what I mean? And I understand those subbies. I've got good mates on the subbies. And they said, mate, instead of getting paid 2 grand to do this job, we got paid 1,000. He said, mate,
half the effort.
Done. I got it done twice as fast. Mate, I ain't coming back.
Yeah.
Do you know what I mean? So that's probably one of the biggest things I find with clients.
Yeah.
Okay, they'll go and they'll get to, oh, here's a cheap builder, I'll get this thing, da 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 da. You need to use a builder. The guys I use, one, I can depend on them.
Yeah.
They'll build the property I want. They'll build it on time. They'll build it on budget, right? And I don't have any issues with them.
Do you also put into the contract a fixed term? So if they go over,
all of those. Well, in Queensland, I don't know about New South Wales, but you got master builders contract, QBA, QBCC, whatever contract. There's all penalties. I mean, most of those. We don't have a lot of rain lately, so we haven't had a lot of contracts going overboard, right?
Yeah.
But from our point of view, most of our stuff, our construction times are, by the time, once we're on site, it's somewhere between 14 and 16 weeks.
That's a typical build time.
Typical build.
2-story, 4-bed, 2-bath.
Yeah, exactly. Yeah, nearly all of our contracts are 20-week contracts.
Yeah.
Okay, but that's what we build them in. But at the end of the day, we don't want to build them too fast, too slow. Yeah. You want a nice home, mate.
Indeed.
You know what I mean? It's not. You're going to have, for most people, they're going to have this for 10 or 15 years, or maybe 20 years even. So you want to have a quality product at the end of that time. You know what I mean? You don't want it to be one of the shitty houses falling down in the street. You know what I mean?
What are your savvy investors doing differently?
Oh, mate, the smart investors right now, they're getting started.
Yeah, so actually taking action.
Yeah, I mean, I don't know. I mean, I know the market in Sydney is depending on who. I got good mates of mine down there telling me it's still going great and all this sort of stuff, whatever. But from afar, you would think that people are having this property values are going backwards in certain areas.
Yeah.
The thing in Brisbane, in other parts of Australia, but the one thing that Brisbane doesn't do, it doesn't have massive jumps, but it doesn't have massive fall-offs either. Okay, and the reality for me is that you probably won't borrow money any cheaper than you can right now.
Yeah.
Probably the hard thing about it is that with APRA and a few of the things that the government has forced on the banking industry has probably made it a bit harder than it has been in a long time to borrow money.
Yeah.
But if you can, there's some really good opportunities out there. And I'm not trying to just push Brisbane, but the Brisbane marketplace it's been sitting, it's been getting its 2 or 3% capital gain over the last few years, or the last 5 or 6 years, in a market that's pretty cold, pretty steady.
Yeah.
But the Brisbane market's going to change. Over the next 3 to 5 years, in the next 12 to 18 months, I would say that you'll find property, that $340,000, $350,000 block of land will be $380,000, $390,000 in another 12 months or another 6 months even. What
level of growth does that represent?
Oh, well, that'll be, I hate to quote numbers, but that's going to be, the thick end of 10% growth.
Yeah.
Right? And the reason I say that is because I've seen probably where once upon a time my block of land might be selling for 350. You know, if I go in there and negotiate for something now, I'd probably get it for 335,
so you're
340.
seeing it on the ground. You're not looking at mediums.
I'm not. I'm just looking at the realities of things. Right? I'm not looking at, because the problem with figures, mate, is they come out 12 or 18 months later after the fact.
Yeah.
Right? We're dealing in the here and now.
Yeah.
And I go to clients and say this and say, look, here, right now, this block of land is worth this. Okay, I can put this house on it. Right, it's worth $700,000. I got a real estate agent, 2 real estate agents saying, I reckon when it's finished, they've seen the plans, know what it is. They say, I'll get $800 and something thousand for that, 820. And sometimes, I've got particular sites now where I got a house selling around the corner for upwards of $850,000 for a very similar house on the same size block of land. So, that growth will show out, but you won't see that in figures somewhere for another 18 months.
Yeah.
And by the time you read those reports,
probably too late.
It's happened.
Yeah,
Someone's bought it
indeed.
and it's done. So when I show clients the opportunity, it's the here and now.
Yeah.
Not what's happened over the last 2 years or 5 years or whatever.
Yeah. Okay. So if you could do one thing differently in your own personal investing journey,
what I would do differently. A couple of town planners and engineers who knew a bit more what they were doing, but mate, look, I come from a background. I didn't. We're not poor, but we were healthy and we never had any money. Right? We were farmers, grew up. I didn't have a massive education, but at the end of the day, I'd rather die trying than not try. You know what I mean? So the only thing I would probably do differently is being probably a little bit more driven towards some of the professional people I worked with. Yeah. Right. Instead of taking them on face value. Right. I should have been sitting there driving them nuts a bit harder. And what's going on?
So following up and
that's the hardest thing. Accountable. Yeah. As much as you say that, the whole industry is when you're a property developer, all you see is everyone taking their little bite out of you. Yeah. Everyone wants their piece of things like that. So at the end of the day, I try to show people, look, if we do this, and even, a mate of mine had a famous quote. He used to sit down and people put deals to him and he'd go, look, we're going to do this, and his quote was, well, so when it really turns to shit, how much do I make then? Yeah. You know what I mean? So have a plan B, C and D, okay? Yeah. But ultimately, the property stuff I'm talking about, doing splitter blocks and infill sites, I find there's there's so much less risk in doing that than buying, a high rise or apartments and those sorts of things, simply because, when I first started in this industry, one of the guys I talked to who've been doing it for probably as many years as I'm doing it now. Yeah. He said, mate, understand it's the land that goes up in value. Yeah. Okay. It's not the house. It's not the time. Whatever. It's the land. At the end of the day, you own land. You got something. Yeah. Okay. So I've always stuck to that. I've never really done a lot in the high rise marketplace. Okay. I lived on the Gold Coast for 15, 16 years, and you see high. The problem with the apartments is they go up and down, round and round, and they're either booming and they're selling them, they can't get enough, or there's thousands of them for sale at some stage. You know what I mean? So we talk about, if I get anyone to buy a nice house in a good suburb, okay, in an average suburb that's got some potential to see their actual growth, and hang on to it. Yeah. The biggest problem I see with a lot of people, they get 4 or 5 years in and they want to sell something.
Why do you think that is? Is that changing personal circumstances?
I think that sometimes, that would happen. I think the biggest concern is I think they might have. I started my own property management company 12, 13 years ago. Yeah. Because I had clients coming to me and saying, mate, look, we want to sell this thing you got us into 3 years ago. And in those days, I used to refer them to the local real estate. Yeah. So there'd be Ray White or LJ Hooker or whatever, right? And they said, look, for the first year or 2 years, we had great, no problems at all, right? But the last 18 months, we've had problems with the house and not getting our rent probably done on time.
Too much for them. They didn't want the stress of life.
Most real estate agents, property managers, are someone who's between 18 and 25 years old. Yeah. And they're looking after anywhere from 80 to probably 120 properties on their own. Yeah. So you've got 100 owners and 100 tenants. right? And they're not getting paid a fortune.
Yeah,
so
yeah, indeed.
they get to the stage, mate, they just, and then they're working Saturdays and Sundays and this and that, and they go, mate, after a while they just go, I'm out of here.
Yeah.
Well, they say, I'll get a better offer. Do you know what I mean? So I started my own property management company simply because I wanted to keep that relationship with my client. So if they've got a problem or whatever, they can ring me up and say, look, guys, what do you reckon we should do? Da, 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 da. And I know that the agent is looking after us, because I'm part owner of that company. I know they're doing their best job. You know what I mean? Or if there's been a problem, at the end of the day, we look after them, we help them out, okay? Because I don't have a property management company just to make a whole heap of money. I want it to look after itself so it doesn't cost me money, but I want to make sure that when I say to you, you're going to get $600 a week rent or $500 a week rent, it's real. You know what I mean?
Indeed.
And there's, the biggest issue I think is people get to the stage where they've had a, I don't know, they just probably, it got too hard, or they get sick of the debt or whatever, or they just think that, I've had clients sell for whatever reasons, and I'm thinking, mate, what are you doing? And they said, oh, well, I need the cash. I said, well, go and buy 20, 30 grand out of it.
Yeah.
You know what I mean? They go, oh, I didn't think about that. And the little things like that, So I wanted to be able to make sure that people just didn't think we're selling my property and moving on. Okay, and two, if they had an issue with something, I could get to the bottom of it, right?
Yeah.
It's very difficult for me to ring up the local road white guy and say, mate, what are you doing with this property? I've had enough. And he goes, well, who the hell are you? Do you know what I mean? So I can get involved. Not that I have to, but in any given stage of a property, you're going to have a stage where you're not going to have a tenant for 2 or 3 or 4 or 5 weeks, right? It's not the end of the world. You know what I mean? For most of our clients, we've usually built a little fund in there that they've got 3 or 4 or 5 or 10 grand sitting in an account, or equity that they can draw on.
Safety net.
The safety net in it. So we set that up. But ultimately, I wanted to make sure they can have that security. They know that because ultimately, for me, I want them to make sure the house is in good nick.
Yeah. Right?
They have a good tenant, because in 2 or 3 years' time, I'm going to go back to them and say, look, guys, you've got enough equity to go and do number 2.
Right? Yeah, indeed.
You know what I mean? I mean, the amount of people who go and buy number 2 would be lucky to be 2 or 3 out of 100. You know what I mean? It's really low.
It's incredible. Why is that?
Well,
it's just people are not.
I think now it's the banking industry that the be able to borrow money is dramatically harder than it is, say, 5 years ago.
Yeah.
I mean, I'd have 10 or 12 clients right now that want to buy something, have got plenty of equity, but they don't have the capacity, right? When they first bought their first investment property, if the lending industry is exactly the same as it was then, they'd be into number 2. Do you know what I mean? So, it's not. And then you get the odd client who's really proactive and keen and fires up and all those sorts of things. But it is a myriad of different reasons why people do things. Some of them just go, I've got 150 grand in this, I want it. You know what I mean?
Yeah.
They go and sell it, pay their taxes and walk away with their own, and they love it. They're rich for a couple of years and then they wonder what they're going to do. But anyway, it's...
If somebody wants to learn more about ATFG and how you can potentially help them, how can you reach out?
Oh, well, we've got a website now. Website's getting revamped, but your websites or whatever, you just look us up, you'll see us on that sort of thing. Or
so is that atfg.com.au?
atfg.com.au.
Is there a phone number or an email address?
There's a 1300 number you can ring. Yeah. And my details are all on there and all that sort of stuff, so you can send me an email and do whatever. But so that's where we're at, sort of thing. We've got to get our website. I'm not quite that... the electronic media and those sort of things. I've got to get better at all these sorts of things. We advertise on social media and all those sorts of things, but we do a lot of our business on referrals, mate. I mean, clients will say, look, I've got a mate of mine trying to do something and that sort of thing, and that's where we do it.
Awesome. Well, thank you so much for coming in,
My pleasure, mate. Thank you.
Appreciate it.
Thank you.